How are you doing, guys? It's Michael here, and today with me, Daniel, and we're on our third episode of Traders Talk. We're happy to be here. Got plenty to talk about and cover. Might have even a debate in the middle. So let's dive right to it. Daniel, take it away.
Hey guys, welcome to episode 3 of Traders Talk. And yeah, Mickey, let's see if my keyboard can survive the debate. I already replaced it today.
Right.
So guys, we're going to talk about macroeconomics today, why you should understand the macroeconomic policy. Nobody wants to study economics. They want to just make easy profits. I see sexy chart pattern. I see breakdown. I see 8 EMA. You have to understand what's going on in the world so you know what you're dealing with, what kind of market you're dealing with. Mickey, back me up on this, but if you understand what the smart money is doing in the macroeconomics, you can understand what's the real order flow, what's the manipulation, where the larger trend is going, especially for you swing traders. This is some information you need to know, right, Mickey?
Yeah, so I actually plan to just ask you, why do we need the macroeconomic? Why is a trader or a day trader will actually care about like understanding the big picture? I mean, from my perspective, or maybe others at home that listening, you can just sit at your computer, look for the pattern, trade it, and you're done for the day. Why do you need, convince me, Daniel, why do you need the macroeconomic, the big picture?
Okay, before I get started, I want to say, Mickey, you're absolutely right. I'll give you an example before I go on. As you guys know, I love MMA. And in MMA, you have your wrestling, your jiu-jitsu, your boxing, your kickboxing. You don't need to know all of them. I mean, several fighters have gone on to be very successful without knowing everything, but it always helps, and it helps a lot. Now, in trading, my number one rule is that you should know know who you're trading against. So different kind of assets had different kind of traders. Now, if you're trading some kind of shit penny stock or like a biotech that's jumping on a short squeeze because the company had good FDA approval, macroeconomics is not going to make or break you unless something drastic happens. But when you're trading bigger assets like futures, ETFs, bigger stocks, that's when it really comes in. Now, as a trader, I'm in the belief that you should have an understanding of everything. You don't have to know everything. You don't have to be great at everything, but you should dip your toes in everything. And eventually you'll get to the point. Let's say you build your account in trading small shares and penny stocks, and then you're going into, medium-sized companies. But eventually you might want to get into trading some QQQ on those good days, or the futures. If you're in Europe, for example, you want to trade the futures, especially if you're in Europe. A lot of the order flow is dead until macroeconomic news comes out, especially when you're trading futures and Forex and stuff like that. So, Mickey, to answer your question specifically, why as a day trader I want to trade, I want to know what's going on. Most of the order flow is electronic algorithms, right? And these algorithms are programmed to not only understand, different kinds of technical analysis, but to understand macroeconomic models. And I'm actually doing a college course on this now for some reason. As Mickey can tell you, economics is like my favorite. For me, economics isn't an academic field. Economics is a sport. So, so basically, these algorithms, have these macroeconomic models, and these algorithms are designed to manipulate you. And based on the macroeconomic model, they'll pursue different trade strategies. Now, in these models, their goal is to get to the end goal of order flow, of a certain kind of order flow. Maybe let's say Apple has good earnings, or let's say for example, let's take this case right now. Right now, we had the Fed meeting, and the FOMC had the meeting with the Fed. And Mickey, you remember in the Fed meeting where they said that we were talking about they were going to raise rates, but they didn't raise rates? Mickey, what were your thoughts and the reaction to the market after that?
Yeah, I mean, it was pretty obvious that they want to raise rate, right?
Yep.
Just another manipulation. The market crashed down. I truly don't understand why, because they didn't do anything. What did they expect? That they
what they expected the economic gods to come and save us from the crisis.
Yeah, something like that. They probably looked for like in Jerome Powell speech. like something positive for the future, and maybe another QA, another QE, and other stuff like that. And since they didn't get it, they dropped the price.
Yeah. Well, also there's also the whole thing with buy the rumor, sell the news. But here's another example. So I was talking about how you want to understand the bigger picture. Let's take this example for the last FOMC meeting. It was buy the rumor, sell the. Let's say there's something called, I don't know, in the institutional world, like the 3-day rule, where you have a lot of orders to get in. You want to go against their main trend. So all these algorithms, they have their economic models they need to fill. Basically, they need to let's say now Wall Street is going with the model that inflation is on, go with the inflation trades. They're going to have to fill a lot of orders. So to fill a lot of orders, they're going to have to create a lot of room. So Miki and I argue on this, but there are tools you can use, like the footprint chart or the different kinds of level 2s to figure out, which is highly manipulated, I will say. But when you have experience, you can understand the manipulations. At least I believe so. And a lot of the time, the market, when they're trying to fill, will move to a different direction and make it look like it's going to the negative direction. But because we know the market wants to fill pro-inflation trades, every time we see the market moving closer to and the opposite, or it's going down, or it's faking downwards, we know it's trying to trap liquidity. And because we know it's trying to trap liquidity, we know how to trade that. We know how to trade that correctly. Beginner traders who are first in the market, they don't know so much. They see this nice bearish flag, and they don't think to themselves that it's a trap or they're trying to get in stops. And because we can see the bigger picture, and actually I was talking to Miki that since I've stopped trading, I've defaulted back to this. Remember, Miki, how I told you that I've been trading in a vacuum, in a sense, where I've only been focusing on the small picture, on the pattern, and not the bigger picture, and how on the different time frames and where institutional order flow is trying to get moving.
Mm-hmm.
And by understanding what's the relationship between my feeling in the market is this, and this is very weird that I do, is I like to look at all the asset classes in the pre-market in the news. I like to create like a model of what I think big money is doing, and I like to follow that model, because I know if, let's say, gold is down, dollar is down, crypto is going upwards, because at this point institutions are playing in crypto a lot. Right. And I see the futures are they're moving downwards in the pre-market, but they're moving downwards in a certain kind of pattern. I can see that institutions are going to try to get some orders filled in the pre-market and at the open. But I know during the midday, I can see some nice bullish patterns and wait for that. And if I go in short in the pre-market or in the open, I know won't be as follow through. Don't put too much size. Be careful and play riskier. And I have this model of, I got this from S&B Capital. Trades to hold and trades to trade. And I know, if I see there's manipulations in the pre-market, I believe that you can trade manipulations, but less room, faster take profit, and don't hold it as long. Miki, what are your thoughts on my long rant here?
Yeah. Okay. So let me break it down just a little bit. First of all, what you're basically saying is that you can take the macroeconomics, you can take the macro news, understand the manipulation better, and then intraday trade it better. That's what you're basically saying, right?
Yes, to figure out where there's some real volume behind.
Right. Yeah. So that sounds great. I believe that if you want to do some, if you're going really up with the macro and understanding what the Fed is doing and stuff like that, you can also trade it that way. I mean, trade it for maybe not just the intraday, but also take it for a few days, either a few weeks or months, actually, if you're really drilling down or going and exploring the news, basically, the macro at least. And I can understand what you're doing. I can understand your opinion about it. I can even relate to that.
I would like to point out one caveat. When you're trading some stocks in play, like stocks on a catalyst, it's not that important. But when you want to trade futures, seriously trade futures, it will become very important, especially this understanding of how order flow is moving through the markets, and understanding, what kind of
I mean, order flows. Sorry, order flows are on the charts or on the orders, not really.
I don't know if it's order flow is the word.
Yeah.
I mean, you want to understand where institutions make a lot of money from commissions, and they have to always be trading. So you understand where the institutional accounts are going. Are they flowing into the commodities? Are they flowing into futures? Are they flowing into current guys? I'm sorry, I'm still on medication for my hand. Are they flowing into all kinds of different assets? You want to figure out where they're going and where the relationship is going, because depending on how these things move, they'll start to create different manipulations to scale themselves out or scale themselves in. Mm-hmm. And you want to be able to tell the difference between a manipulation and a fund actually scaling in, because that's different. Right. That's the difference between a long move that can be multi-day and a short, quick kind of scalp kind of move. And a lot of people, they can't tell the difference, and they think that it's going to be one way for a while, and then they'll adjust their risk to reward ratios, and they'll get burned, and then they won't want to trade or whatever. This is how I see it. To each his own. I'm not saying mine is the way you have to do it, but I think when you're trading futures, and especially if you're trading with large size and an institution, this is the kind of way you want to be trading. This is just my opinion. Miki, what's your comeback to this? Your counter argument?
No, I actually don't have any. I believe that what you're saying is right. But again, if we're looking at the macroeconomic and we really want to understand what's going on, first of all, it's a really interesting subject. Like in general, if we're going, if we're going even outside of the US and try to understand the manipulation, let's call it, between all countries across the world, right? Because there's a lot of involved. All countries are involved together this way or another. But if you are understanding that, you probably want to, and you understand that, let's say there will be another crash or something like that, then you probably want to use that also to trade for a longer time than just day trading. Yeah.
I mean, also it comes down to what kind of person are you? I mean, some people have accounts with 5,000, some have 5 million, some have other assets they want to sell. Like I have, assets for my family, stuff like that, which is because, some assets, stocks are very easy to sell unless you have a lot of size. But other assets like real estate or bonds or whatever can be a pain in the ass. Mm-hmm. So it depends what you're working with. Also, even for a day trader, let's say we're day trading and we see that there's a lot of activity on the SPY. Do we want to trade long, like very heavily long, if in the pre-market we had some news and the news came out very bad? I mean, because the market will try to move higher, but every time it moves higher, that's a manipulation to fill orders for a short. And all the small guys just get in and they get crushed.
Right.
Things like that. So you don't have to need it. And I don't recommend, look, here's my philosophy. I don't believe in predicting the news. I believe in reacting to the news. Mm-hmm. And reacting with how the chart, don't ever trade blindly. You want to have the chart number one. But if you see there's some negative moves and the market's trying to move higher, you can tell yourself it's probably manipulation.
Okay. And then see where you're taking it.
It's going to move higher to a major level, and then everyone will buy in at the major level, false break, and then crash.
Right.
And all these traders, I saw this nice breakout. Why? But they didn't see in the higher time frames, like on the daily or the hourly chart, the market was overextended because institutions were already scaling out. They didn't see that the news was bad. They just saw this nice flag and they got crushed.
Yeah, definitely. Yeah. Always take this price action. You gotta understand that trading is not about just the pattern. You gotta understand where the pattern coming from and who created it and what are they actually trying to do, the smart money. So yeah, definitely.
I would say I think trading is about relationships. Relationship between psychology to technology, the technology to technical analysis to fundamentals. It's understanding how these things work together and how, because it's an experience thing. You'll see it, you'll understand it over time, and it's one of those things you have to do. You have to experience to really understand it. Right. But people like to find the easy solution. They like to focus on the one thing. you have to be like holistic in the sense of the whole approach.
Right.
You should understand what you're dealing with. Also, on the fact that depending on the macroeconomic environment, the SPY will move in a certain way, the VIX will move in a certain way, and that kind of volatility will spike over into other names. I mean, would you want to trade, a stock like AMD into a breakout if the major sector is moving in a consolidation? Unless there's some great news in AMD, I wouldn't take that trade.
Obviously.
Most of the time, the market moves in the sector.
Right.
So depending on what you're doing here, and none of these things we're saying are rules. They apply to different situations. I have to hammer that into you guys. Nothing we say is in gold. There's no holy grail. There's no one size fits all. Everything. It's like, it's like when somebody. There's a saying which is like, if he does something, you do one of 1,000 other things to do. You don't do this one thing. There's several, and this is why you need good coaching, good education, and good experience to give you the different things you can do to react differently. If there's one thing, everyone would do it, and that would be it. So
that's true. I got some student of mine asked me like a few days ago. He asked me if I believe that a robot and algo can make money while just finding a support level and then, let's say, a reversal candle like an hammer or something like that. And I told him it won't work for the long time, because at the end, if anyone, if it was that simple, anyone would done it already. And he didn't understand that fully, but hopefully he will someday. You gotta understand how to read the smart money moves. Like the one we spoke about it 2 days ago, Daniel, about the trade I made on the TAL. When it dropped down to 21, I took it right at the end of the day on Thursday. That was the classic one. Looking at the price, looking at the smart money, knowing that they are buying there, and then get into the trade.
Yeah, and look, I actually wanted to add something here. Apparently, on these GME and AMC, somebody said on CNBC, like a former Citadel trader, and for you guys who don't know, Citadel is like the world's biggest market maker, or an exchange, like a private exchange, and all of Robinhood's trades go through them, through Citadel, basically. And 70% of trades at AMC and GME are being through Citadel. That means the majority of these trades are being done by Robinhood people. And I want to talk about, this also applies to crypto. A very small, the majority of crypto is held by like 40 wallets. So that means that the majority of crypto is not even in circulation, really. And there's also a lot of leverage being involved. You don't need that much to move the prices. A market maker who moves the prices, or in this case, a market making algorithm, and needs to see on the current bid and ask, there's more buyers than sellers of the pool of current market participants. It doesn't really calculate which it does, but not as much to the extent of which ones are not in circulation. So basically, from what I understand from Robinhood, is the majority of GME and AMC are owned by a few people who have now positions worth in the tens of millions, and everyone else is just buying it up. I mean, this is with leverage. This is a recipe for disaster. And Michael Burry, who's from The Big Short, has given some tweets, and he's talked about if you don't understand the leverage behind crypto, the crypto bubble, you don't understand what's going on with crypto. So Miki and I were arguing before. I'm bringing this up because Miki and I were arguing before the session went live about, is the economy going to crash? And I say yes. I don't know when. I think sometime in the next 2 years. But Miki says no.
Let's talk about it. Yeah.
Yeah, but before I go into that, Miki was asked. Miki, you brought up, why did the market sell off?
Okay.
So Miki, you want to talk about the market sell off here?
No, go ahead.
So the market had its worst month. I think it was down 5%, worst month in like a couple of months, worst week in a couple of months. Couple of things. One, buy the rumor, sell the news.
Right.
Two, we see a lot of infighting in the federal government. I would like to say, as a former Trump supporter, Trump's activity has really fucked us up. 30% of dollars being printed right now. Inflation is skyrocketing. The Federal Reserve balance sheet is nearly $9 trillion they're holding in assets. They've been buying up mortgages, which has created a housing bubble. We're facing both a housing bubble and a stock market bubble at the same time. This is a disaster waiting to happen. Miki, you want to add something?
Yeah, if we are talking about that, then I do believe that we will see a crash in the near future. Let's say, yeah, it could be a correction or a crash, but just like a massive correction, right? Because
20%.
Right, even 40. The Corona, it was 40% drop or 35% drop. So I don't see a reason why we won't see those, a lot of those, in shorter time frames. So basically, a shorter period. So you will see it, let's say, every 2 years or every 4 years, stuff like that, and you will see a major drop and then a bounce up, similar to the Corona, probably even faster and aggressive than it was there.
You know that in crypto, 2 years up, 2 years down. It goes. I think that if crypto is the future, let's say, look, you were talking about how the market is different than it was in 1929 or whatever, because electronic trading, HFTs, institutionals, we have, and I'm saying you're right, but this idea that the market will go up forever I don't believe this, especially when rich people smart money likes to crash the market to buy a thing for cheaper. That we can't agree on, right?
Definitely.
So what am I thinking? What are the future of the market is that every 2 years, it goes through bear and bull cycles, 2 years up, then crashes, 2 years down, then up. And this way, one, the retailers get chopped up by the institutions, and two, because the smart money is smarter and they have more experience, more capital, and they know what they're doing. And smart money is not just bank, but bigger players, professional traders. Because in a recession, you can actually make more money than in an uptrend. Because yes, an uptrend is very nice where the market's going up, but in a recession, there's a lot of volatility, and if you can trade the volatility well, you can make a lot of money up, down, sideways. And I've been reading about this, like the experiences of traders in 08 and 09. They said whatever money they made before the crash in 08, they made a lot more after the crash because the market volatility was so high, and you would see these spikes.
Yeah, definitely. I mean, when you got so much volatility and you got so much volume coming in, then you can buy a lot of shares or a lot of contract, whatever, in a great price. And when it started to move higher, you made your money. So this is what they're trying to do all the time, right? They're looking for a liquidity area, and they're buying there or selling there. In a recession or in a crash, they got a great price, lots of volume coming out, like sellers. Then they buy it at the bottom, like they did.
So let's talk about what happened with the Fed. So first, I would like to say that the federal government has a lot of infighting with itself, and we still have a lot of foreign policy, but we're talking about economics here. So we're seeing a division in the Fed. As I said, the Federal Reserve did not raise rates. It did not stop QE, and it gave barely lip service to the idea of stopping QE. There are basically there's a board of governors on the Federal Reserve. I'm sorry, there's a board of governors on the Federal Reserve, and Powell is the head governor. But there are two vocal governors. Jim Bullard, who is very hawkish. Dovish means that you want to lower rates. Hawkish means you want to raise rates. So Jim Bullard is very hawkish. And we have, I don't know his other name, it starts with a K, I apologize, Kachari or something, who is very dovish. Jim Bullard has been going on TV saying there's going to be an earlier rate hike. And Jim Bullard is a very powerful member of the Fed. He might even replace Powell, to be honest, because Powell is getting replaced. I think Powell himself doesn't want to stay. And Powell is a Trump appointee. He's not a Biden, whoever's behind Biden appointee. Right. I think that Yellen is going to be basically in charge. Because Yellen is the head of the Fed, was the former head of the Fed, and she was an Obama appointee. That means the Biden administration is really Yellen are very close, and Yellen is hell bent on raising rates. And when Yellen has, I believe, in the past has raised rates and has even lowered, she's done both. So when she wants something, she's going to do it. So. And whoever Biden is going to install into the Federal Reserve He's going to be a puppet of Yellen. And if that's Jim Bullard, which is a serious statistical chance, that means that we're going to see a rate hike. And Bullard doesn't want to. Right now, the Federal Reserve is saying there's going to be a rate hike in 2023. Before it was 2024. If there's going to be Bullard in charge, that means that in 2022 we're going to see 2 rate hikes, probably at 0.50 and then probably at 0.75. I don't see them doing it to 2% or 1.5 or 1.25%.
No way.
Yeah,
there's no way.
But 0.5 and 0.75 are very doable. They can do 0.5 every 6 months, 0.25 every 6 months, and then when they reach 0.75 or 0.1, they can lower it again. That's what they're going to do, in my opinion. And they're probably going to, But and the other question is with the QE, what are they going to do? Because the Federal Reserve is basically holding money for the Treasury, because the Federal Reserve is the bank for the federal government at the end of the day. That's their main job. They have 2 jobs. Employment, they have 2 jobs officially, employment and inflation, and they also hold the money for the governments. Basically, the government has the general account. That counts at $600 billion in cash. It's almost at $400 billion. The government said once there's $400 billion, we're going to raise more money by selling bonds. That's going to cause interest rates to spike. So if they don't, they're going to have to. I think that the Federal Reserve came out and said that inflation is too high. I think we might see a rate hike in the next 6 months to a year. Miki, what are your thoughts on this?
Yeah, I mean Kashkari, the
Kashkari.
second guy. Yeah, Kashkari. It's a tough name.
Yeah.
The second guy, so is basically opposed that, right? Opposed.
Yeah, he wants to. If he could, he probably would lower rates.
Probably, because he basically believed in the American people, or saying that the American people is basically wanna go to work, and will probably and we will probably see this inflation will disappear soon, because everything will go back to normal.
Yeah, transitory.
Right. So
yeah.
I can't agree with him, because at the end, I think you told me about it as well, and I read it in the news, that the average, the salary, the average per hour, right?
Yeah.
So the dollar that they're making is like 16 or 15.
15. Yeah. And the government is paying 17.
17. So who would want to work, right?
Yeah.
I mean, I got friends here and also in Tel Aviv that saying the same thing. They're getting about, let's say, like 7,000 shekels a month, and
which is like almost $2,000 a month without taxes.
Right? And instead of making $8,000, right? So they're like, instead of making 8,000 shekels, sorry.
So basically, instead of making $2,500 a month and paying taxes, the government is paying them $2,000 a month and they don't pay taxes because they're not working.
I think they do have to pay taxes, but yeah, it's nothing. It's better for them to sit at home or just do stuff they like. And all that.
It's worth losing the $200.
Okay, Daniel. So we talked a lot about this potential recession, or like you said, the rates up, down, the economic in general. What is your solution? What do you think? What could make it better? Or what is better?
My solution would be to move to Panama. I'm joking. Don't move to Panama. Actually, that'd be a terrible idea if there's a recession. My idea for what should we do, or what should the government do?
I mean, for the guys who are actually watching or listening and want to make money at the end of the day, right?
My best advice to be for you is to invest in education, because unfortunately, I don't have a crystal ball. And if I did, I wouldn't tell you anyway. But my best solution for you guys is to find quality education and make yourselves available to trade if the recession or not the recession or the recession, whatever the market throws at you, be able to fight back. That means understand the macroeconomics, understand what are the signs that we're going into recession, understand different strategies. A lot of people are only trading flags, and I think because the market's been going up in a straight line, that the flags will go on forever. I think now, recession or not recession, we're entering a choppy market environment, which means more volatility, more false breaks, more reversal kind of trades, and learn how to be a more complex, advanced trader. Focus on your education. Don't say, I've had a great year with the market going higher, and don't be, there's a word for it, I'm forgetting the word, complacent. Don't stay adapt, change, and learn to grow. That would be my advice to everyone.
Okay, that's great. Yeah, definitely. If we are moving from a bull market to a bear market, or at least a sort of a sideways consolidation market, we will definitely have some false breaks. Lots of flags won't work, basically, and you gotta know how to adapt yourself to the situation, right? So yeah, definitely take that into consideration. Other than that, maybe Daniel, if you were the president of the United States, what?
I quit.
Quit.
I quit. Fuck.
Not,
I quit.
not even.
Not even. Not. I'm out. Peace. Be gone. If I was president, when I was in school, this is a true story. They asked me. They had to do. This is a true story. You're all gonna laugh. When I was 12 years old, they had to write down on a card, if you were president for a day, what would you do? And everyone was like, I'm going to end homelessness. I wrote a long list of economic policies and my teacher couldn't read and she had to skip over me. So I'm going to do this. I'm going to say exactly what I wrote when I was 12.
Cool.
One, I would raise interest rates. Two, I would lower regulations. I would end all this government handout. Go get a job. I would lower taxes, raise interest rates, and I would fight the inflation. That's what I would do. Okay. And I would crash the economy, knowingly crash the economy. Not the economy. The economy still crashed. I would crash the stock market.
Okay, so you're basically saying it's okay that it will fall.
I'd rather have a controlled crash than everything goes shit by itself.
Anything, yeah. Gotcha.
And that's what I'm worried about, guys. We have so much infighting in the government. We have no leadership. That a crash is one thing. A crash where no one knows a crash where people are fighting each other and nobody notices the market's going to shit and nobody's reacting appropriately. And one guy's doing this and another guy's doing this. That's when shit gets really bad. So let's see what happens.
Right.
Yeah.
Okay, cool. Thanks, Daniel. Yeah. Like always, it was a pleasure. And I hope you guys like it at home. And that was our third episode of Trader Stock. Next week, like always, on Sunday. Make sure you stay tuned. Daniel, I'll see you. Take care.
Yeah, guys, have fun.
Bye.
Bye.